economist at Morning Consult. This is a firm that specializes in online survey research. And John, it's great to have you on. High frequency data. What is it showing you? How do you gather it? And what is it showing you?
Yeah, what it's showing is a labor market that has consistently weakened over the last 4 weeks. I don't think it's falling off a cliff, but we're certainly in a weaker spot than we were prior to the last jobs report. And I think the more concerning part is that we're seeing some weaknesses in segments of the population, particularly higher income segments, that have driven so much spending for all the companies that you showed earlier who are reporting earnings.
Interesting. So why the breakdown there? I think you just mentioned higher income. I guess what is that reflecting about the state of the economy and where the jobs are or aren't?
Uh-oh. There's a big problem. And the big problem is that the job markets are starting to hit people with money, meaning that there are less jobs for those who are making higher incomes, right? And my feeling is that the job market reports are worse than we ever thought. That's my feeling. But the job market reports are actually really bad. And they've been lying to us, which we know that's been true because over the last, 4 years, they were saying they were doing about 1 million jobs a year. But now, I know in the last report that came out, it was like less than 100,000 jobs, and I'll get the exact numbers. The economy is breaking down, and we need to be aware, right? And when higher paying jobs are being affected, it lets you know that we're going into kind of a downward spiral.
I think it's reflecting slow but steady pass-through of uncertainty from tariffs and tariff policy into hiring. It's starting to reflect some of the substitution of capital, of labor for capital, as AI is starting to replace some workers. And I think we're also coming out of a period, right, where we had robust jobs growth, record low unemployment. And so all those factors together are contributing to this weaker situation. Again, I don't think that we're in we're falling off the cliff, but it is important as we're trying to calibrate really important policy decisions like interest rates to acknowledge
we are falling off the cliff. You are falling off a cliff. And it just really hasn't hit. Well, it's hitting mainstream media right now because they're starting to talk about it. Usually when they talk about it, it's too late. It's already happened, right? It's kind of like when they talk about companies that are going to be the next Fortune 500. They've already made money on it. By the time it hits the stock market, it's too late, right? So everything's already happened, and now we're just starting to get a taste of the madness from the last job market report, right? Like I said, I think that is total BS. I think that the job market reports are totally just rigged, like most of everything in this country, to keep people calm, right? But ultimately, I really do think it's a shit show at this point, right? It's starting to buckle, right? Because again, those high-paying jobs are a good indicator that one, not the retail employers, which we know are having hard times hiring people, but now the white-collar workers aren't getting those jobs. So what does this put us in the future? I don't know, right? He is correct. AI, I'm going to say this. I'm going to probably say this over and over again on these on this channel, is that AI is going to take over a lot of our jobs in the future. So you got to be aware of where you're positioned at, what you're doing, so that you can pivot, because a lot of the things that are happening in the offices, those jobs are going away, right? They're consolidating, and they're telling you that those higher paying jobs that humans used to do are basically not going to be available. So this is where we're at. Like I say, guys, hey, this is Kill Rashid. Like and subscribe. I'll be back with another video tomorrow. Peace.